The January Consumer Price Index was released this morning and gave us a glimpse into what 2026 could look like. What does the report show us about our economy? Bankrate financial analyst Stephen Cates joins us now to give his insight. So, Stephen, inflation rose just 0.2% in January and fell to 2.4% on an annual basis. So what is that telling us about prices right now?
So I think the important thing for people to know is that prices are rising on an annual basis. So since January of last year, risen on average 2.4%. So when we talk about cooling inflation, we're talking about the rate of change. And this is a good thing. We are seeing a slower upward movement in prices, and that's what we want. But we also want that to continue. We need prices to only be going up somewhere closer to about 2% on an annual basis. So we've got some work to do, but this is progress, and that's a good thing.
And what does that rate then tell you about how the economy is doing? I know you say we have work to do, but is it doing decent?
Well, it is doing decent. Now, anybody who's paying attention to the jobs reports over the last few months might be thinking that the economy is ready for a recession. The January jobs report just earlier this week showed actually a surprisingly good result. And that shows that we are getting some job growth to start out 2026. We're seeing still strong GDP growth, and we'll get more data coming out in the next couple of months. This shows that prices are rising at a slower pace, but still rising. And, that is a level of demand that we do want to see. So we're a far cry from the sort of stagflation concerns that we had in late 2025.
We always hear about how the labor market recently played a role and inflation played a role in what the Fed decides to do. Could we expect the Fed to continue to cut rates, or do you think we will see maybe some pullback on that?
So I think we can expect the Fed to cut rates, but it's no longer clear exactly when. Falling inflation is going to be something that would encourage lower rates, but we need to see inflation continue to cool over many months before the Federal Reserve may feel confident enough to start cutting rates. At this point, with relatively positive job report just recently, there is no urgency to keep cutting rates to support the labor market. We may be in a position where they can be patient, and rate cuts might come closer to the end of the year.
And the report also showed travel, housing costs steadily continuing to climb, but energy and gas prices, they're down. Do you think that that will translate into lower prices as we move forward if those gas prices stay lower?
So gas prices are certainly down, and that's going to be a comfort for consumers who look at that. I think that and groceries are probably the two items that most people see most often. But what's troubling within the energy portion of the CPI is that electricity prices year over year, still very high, up over 6%. Gas, propane piped into people's homes, that's up nearly 10% year over year. So those things are certainly adding considerable cost to people's bottom line, especially during wintertime. It's going to be hard to say exactly how those are going to shift over time. We aren't likely to necessarily see gasoline prices for cars probably fall a whole lot more. So the beneficial impact that that's had on reducing overall CPI has probably run its course.
All right, Stephen, thank you so much for joining us here on 21 News at 5.
My pleasure.